This is ShadowQuant, Crypto Edition, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Monday, August 24, 2026, and this is the New York pre-market. Now, let's get into it. Bitcoin is holding above 79,000 despite the crypto fear and greed index crashing to 14 out of 100. We're seeing a massive decoupling between price action and retail sentiment, driven by a collapse in institutional futures demand and a spike in geopolitical liquidity. Let's break down what the data is actually showing this Monday morning. Looking ahead to the economic calendar, the Chicago Fed National Activity Index drops today. On Tuesday, we'll see housing starts, building permits, and new home sales. Wednesday brings Case-Shiller home prices, and Thursday closes the week with durable goods orders. For crypto, these housing and manufacturing data points will help gauge whether the broader macro environment is tightening or easing, which directly impacts risk appetite in digital assets. The market snapshot shows Bitcoin at $79,212, up 2.44%, while Ethereum is outperforming at $2,514.62, up 3.39%. The VIX is compressing at 15.13, suggesting equity markets are complacent, yet crypto retail is in panic mode. Bitcoin dominance sits at 58.96%, confirming a flight to quality. We have significant news flowing today, starting with geopolitical shifts and institutional adoption. First, Cointelegraph reports that Iranian crypto outflows have spiked 700% following U.S.-Israeli airstrikes. This is injecting volatile liquidity into specific altcoin corridors. CIPHER, how is this flow data impacting the broader market?
It's creating a bifurcation in liquidity. We are seeing a distinct injection into specific altcoin corridors rather than broad market stability. This is non-fundamental capital moving quickly, likely distorting price discovery for mid-cap assets, while traditional risk assets remain cautious.
Second, CoinDesk reports that PayPay, the 40% owner of Binance Japan, is seeking up to $1.10 billion in a Nasdaq IPO. This signals potential future exchange inflow shifts. SPECTER, what is the risk angle here?
It highlights the growing institutionalization of exchange infrastructure, but it also raises regulatory scrutiny. As exchanges like Binance Japan go public, the pressure for compliance increases, which could tighten liquidity for retail traders who prefer anonymity. It's a double-edged sword for the ecosystem.
Third, Cointelegraph reports that TD Securities sees NYSE tokenization as an institutional turning point. This is driving Chainlink up 2.77%. Pulse, how is this narrative affecting sentiment? It's reinforcing the flight to quality dynamic. Investors are rotating out of speculative L2s and into institutional-grade infrastructure plays like Chainlink. The sentiment isn't just about fear anymore. It's about capital preservation in assets with perceived regulatory clarity and institutional backing. Let's talk about Bitcoin first. It's at $79,212, holding steady despite the extreme fear index. Grid, what are the technicals telling us?
Bitcoin is testing the $79,000 support threshold. It is currently $212 above that critical floor, with immediate resistance identified at $81,500. The structure is holding, but it's fragile. We need to see if this support level validates the current price action against the backdrop of collapsing futures demand.
And that's the issue, Grid. The underlying institutional infrastructure is contracting. Futures demand has fallen to 2024 lows. This indicates a significant reduction in institutional leverage. Without that leverage buffer, the spot price resilience at $79,212 is vulnerable. We are seeing a void in derivative support.
Exactly. This isn't a healthy accumulation phase. It's a liquidity vacuum. The lack of futures support combined with geopolitical liquidity injections creates a brittle price structure. If the VIX regime shifts in equities, This decoupling risks a sharp recorrelation. The current price strength is masking a structural retreat in institutional leverage.
Moving to Ethereum. It's at $2,514.62, up 3.39%, having broken above the $2,500 level. Grid, what's the technical setup?
Ethereum has breached the $2,500 level, offering a stronger relative strength signal compared to Bitcoin. The next technical barrier is set at $2,600. The momentum is building, but we need volume confirmation to sustain a move past that resistance.
The volume is there, but it's concentrated. Total crypto volume stands at $101.96 billion, yet Bitcoin dominance remains high at 58.96%. This confirms that capital is concentrating in safety rather than rotating broadly. The Ethereum breakout is being driven by institutional narrative plays and tokenization interest, not broad retail speculation.
I challenge that bullish bias. With Bitcoin futures demand at 2024 lows, any upside move in Ethereum is likely a liquidity trap driven by short covering rather than genuine buying pressure. The $2,600 resistance level is a high-probability rejection zone for leveraged longs. The flow data doesn't support a sustainable breakout without institutional leverage backing.
Let's look at Solana. It's at $96.38, up 1.57%, holding the $96 support base. Pulse, what is the sentiment reading here?
Solana is acting as a risk-on proxy in this environment. While APT and Polkadot are bleeding, Solana is holding support. The sentiment data shows a clear rotation into established layer ones. The 7-day sentiment trend is rising from a low of 12, suggesting that while fear is extreme, the psychological bottom is forming. Solana is benefiting from this flight to quality.
Technically, Solana is consolidating at $96.38. It requires a volume surge to clear the $100 psychological resistance. The consolidation suggests accumulation, but we are still waiting for the volume confirmation to validate a breakout.
The volume surge is the key. We are seeing inflows into Solana, but they are competing with the geopolitical liquidity flows I mentioned earlier. The Iranian outflows are creating volatility in specific altcoin corridors, which could distract from Solana's technical setup. We need to monitor if Solana's inflows are sustained or if they are being siphoned by these geopolitical flows.
Finally, let's touch on the laggards. APT is down 2.3% and Polkadot is down 0.29%. SPECTER, what is the risk here?
This is the speculative bleed. Capital is actively fleeing high beta assets like APT and Polkadot in favor of safer plays. The extreme fear sentiment combined with collapsing futures demand indicates that the market is pricing in a deeper correction. These assets are vulnerable to continued outflows until futures demand recovers.
Apex, synthesize the key takeaways from this analysis.
Grid flagged the $79,000 support level for Bitcoin and the $2,600 resistance for Ethereum, but CIPHER showed that the lack of futures demand creates a structural risk for both. The data confirms a defensive rotation. Capital is moving into Bitcoin, Ethereum, and institutional narrative plays like Chainlink, while high beta alts like APT and Polkadot face sustained selling pressure. The low VIX in equities contrasts sharply with crypto panic, creating a fragile decoupling that risks recorrelation if traditional markets open lower.
To recap, Bitcoin is holding $79,212 despite extreme fear. Ethereum is breaking above $2,500 on institutional interest, and Solana is consolidating at $96.38. The key takeaway is the flight to quality, with capital rotating from speculative alts into established layer 1s and tokenization plays. Tomorrow, watch the housing starts and new home sales data for macro cues. This is ShadowQuant Crypto Edition. This is AI-generated content for informational purposes only, not financial advice. That wraps up this edition of ShadowQuant Crypto Edition. Stay tuned for the New York session, where we will see how these calls play out. Until then, trade safe.